In today's video we're going to take on the Big Bang. Now, for anyone thinking this is going to be some sort of tour of astrophysics and the origin of the universe, you'll be disappointed. This is the city's Big Bang in 1986, and basically we're going to talk about what it was, some of the key changes that were introduced, and answer the question, did it lead to the current financial crisis and the kind of state of the economy right now? Because some people trace almost the origins of all the problems we've got today back to that momentous event in the mid-1980s. Okay, so what was Big Bang? Well, in essence, you had Cecil Parkinson working for Maggie Thatcher. This was the 1980s, and they thought what they would do in negotiation with some of the bigwigs in the city, specifically Sir Nicholas Goodison of the Stock Exchange, was to open up the London markets. And boy, did they open them up. What they decided to do was to end the cosy club described by the Financial Times as sexist, snobbish and not very hard working, and create the modern financial services industry we know today, which I would argue is sexist, yobbish and very hard working. Okay, so Big Bang, what was it? Well, there were several changes. Most of them affected the way the city, and specifically the London Stock Exchange, worked, but the ripple effect was actually enormous. So let's look at two or three of the key changes that were brought in by this thing called Big Bang, or the deregulation of financial services as it was known. So first of all, looking at the stock exchange, basically what happened was, in the good old days, as some people saw it, pre-1986, you had two distinct roles. You had people called brokers. We've still got people called brokers. They took orders from clients, and they still take orders from clients today. But then you had separate jobbers, as they were called. And jobbers ran books of shares, if you like, and dealt directly with brokers for a fixed commission. So in other words, you had a complete separation between the people who held a book of shares, if you like, the kind of second-hand car dealers in the market, and the people who provided the link between a customer and those people. And brokers worked off basically a fixed commission system, and that meant there was a fairly clear distinction between the role of the broker, acting as an agent to a customer, and the role of a jobber, acting as what we now call a sort of market maker, if you like. In other words, pricing shares, running books of shares, and acting on instruction to fill orders from brokers. And as such, you had a system which everybody sort of understood. Fixed commissions meant that, in essence, brokers and jobbers were in competition with each other, because basically you couldn't incentivize a deal between a broker and a jobber by changing the commission structure, because there was no scope for doing that. So that lack of competition meant that the market was kept reasonably keen, some people would say, in terms of minimising conflicts of interest. Okay? And the Big Bang did away with that. So rather than having people known as jobbers, that's a term you don't hear anymore really. Today the nearest equivalent would be what we call a market maker. And by the way, if you're not too sure about what these market makers now do, by all means take a look at my other videos. One is what is a stock exchange, another is what do investment banks actually do, and you'll find out a bit more there. But essentially the distinction between jobbers and market makers, or what I could call the price makers, alright, and brokers acting for clients, actually fulfilling orders by talking to these people, what you might call the price takers, was abolished. All right, and basically today we have the grandiose title broker dealer. In other words, what Big Bang did was it allowed these two roles to be combined. So the big banks took full advantage, fixed commissions were abolished. Okay, so suddenly a bank could claim to be a broker dealer. In other words, American banks arrived in the London market, snapped up local firms and offered to be a one-stop shop, where they both created a market for shares and also filled orders for clients, and they did it on a fully competitive basis. So that meant that the fixed commission system, that's point number 2, was abolished. Fixed commissions abolished. Alright, now we'll talk about one or two implications of this in just a moment, but what other changes were brought in? 2 other quite large ones. One's a sort of hidden one that came in with a separate piece of legislation in 1986, but here's the next change. Suddenly foreign firms were allowed to operate in the City of London almost unfettered, if you like. So foreign firms suddenly were allowed in to what had once been a cosy UK-only club, if you like, and they took full advantage. The big American banks suddenly thought, oh crikey, we can buy up all these little cosy partnerships that have been providing dealing services and so on at the London Stock Exchange. We can get involved, we can raise capital in the London market potentially, and they took full advantage. Many of the old private broking firms in London vanished, got snaffled up by the much bigger American banks, and that's been a pattern that's persisted ever since. Yeah, the situation where you walk around Canary Wharf and you've got these huge international banks sitting there in big glass buildings and so on originates from really some of this stuff that was going on in the mid-1980s. And the other thing that's worth noting, doesn't get a lot of comment, is that there was a deregulation in the bank and building society market. That's those building societies, believe it or not. The point is basically that in 1986, or from 1986 onwards, the distinction became much more blurred. In other words, building societies could suddenly start doing some of the things that banks have previously only done. So building societies went from being cosy home loan clubs, almost owned by their members, to being able to compete directly with banks. So, for example, now we associate building societies with cash point machines, just like banks. We associate them with current accounts, just like banks. And many of them took full advantage. In fact, some of them even became banks and then listed themselves on the London Stock Exchange. So a revolution for building societies. And some would say, you know, the Northern Rocks that we've seen in the last few years have their origins back there, because suddenly building societies could do a lot of things that they hadn't previously been able to do, compete directly with banks, raise capital in a similar way to banks, and that meant take some of the risks that perhaps had previously been associated with banks. So some of the recent crisis has its roots back there, when the roof was blown off the kind of cosy, mutually owned building society club. Okay, so this had a number of far-reaching changes, and if you like, the biggest single mistake, the thing that's missing here, was an overhaul of regulation, and I'll talk about that in just a moment. One of the consequences of doing this wasn't probably foreseen fully by the government at the time. They didn't realise that by doing all of this sort of stuff, you were going to basically bring huge amounts of business into the London market very, very, very fast, raising deal volumes almost stratospherically, almost immediately. And frankly, it's debatable whether central banks and regulators ever kept pace with it. And therein lies sort of the seeds of some of the problems we've seen in the last few years. So if there is an origin in the last few years' problems, back in 1986, it's that mistake, I think, that's at the heart of it. But more about that in just a moment. So, what did this actually do then? Well, I've hinted at one or two of the changes. Suddenly, lots of foreign firms flooding into the London market, snapping up the old private stockbroking firms and so on that used to operate at the London Stock Exchange. Suddenly, the abolition of fixed commissions sent deal volumes through the roof. Suddenly people could compete on price for business, and that, you know, fans of Big Bang would say made London much more competitive, because with fixed commissions it wasn't. I mean, how can you compete against other international markets if all your commission rates are fixed per deal? So suddenly you had deal volumes rocketing. Fans would say tax revenues rocketed for the government, because suddenly you got all these foreign firms operating in London, the size of the London market rapidly expanding to take advantage of these changes. So suddenly you've got a lot more firms paying a lot more tax. So fans would say that, you know, increased over the years the amount of money that the city contributed to government coffers. You had big efficiencies, because what this meant, other changes around this time, were things like the London Stock Exchange closed its trading floor forever and moved to an electronic trading system, still has that today, Okay, so you had all kinds of technological efficiencies coming into the London market almost by coincidence around the time of Big Bang. Okay, 5 or 6 years earlier, around 1979, you had the foreign exchange markets opened up as well. So Big Bang really accelerated a trend to opening up the London market to international competition and international interest. All right, so that was Big Bang in a nutshell. Problems. I would say the biggest problem with Big Bang, there I am again, well, the biggest problem with Big Bang was basically, in a nutshell, that regulators were caught napping and arguably have been caught napping almost ever since. All right, because here's the problem. Was the Big Bang good or bad, if you wanted to sort of look at it that way? Well, on the plus side, yes, huge efficiencies, new technology, lower costs with the abolition of fixed commissions, greater competition. Well, most people would see these as positives, okay, and that meant a huge increase in volumes, not just trading stocks and shares, but the arrival of these big banks in the London market, because that's not all they do after all, meant, you know, that M&A deal volumes, advisory work went up. Suddenly, you know, London was at the heart of what was going on globally, and you know, the amount of business coming through the London market really sort of started to shoot up. So fans would say that's all fantastic, and the knock-on effect was higher tax revenues and so on. But unfortunately, deregulating all of the markets like that did open up the possibility of conflicts of interest. Okay, what I mean by that is, under the old system, if you dealt in shares, you couldn't also advise. Okay, if you traded, you couldn't also deal as principal. You couldn't be basically somebody who was a broker and somebody who was also a jobber. Those are two separate roles. Well, Big Bang combined them. All right. So one of the big problems you've got is Big Bang created these enormous one-stop shops. You know, the global investment banks now are enormous. How do you manage conflicts of interest? And I'm afraid, you know, regulators have never really got to grips with that. They have this gloriously vague expression. One of the prime tools for managing conflicts of interest, still true today. If you don't sleep well, you could open up the FSA handbook, don't recommend it, and look up conflicts of interest and how firms are supposed to manage them, and you'll find this glorious expression. Just to give you an example of what I mean by regulators not really knowing what's going on here: Chinese walls. Chinese walls don't really work, truth be told. A Chinese wall is defined as an artificial barrier to the flow of information. So imagine, take a huge investment bank, for example. What you do is you separate out the people who shouldn't talk to each other because there is a potential conflict of interest. How do you do that? You keep them in separate buildings, give them separate IT systems, give them separate security passes and so on. And you trust them not to talk to each other. Well, I'm afraid that's a little risky in the financial services market. Okay, number one, you can have the best Chinese walls you like in the office, but what happens when people go down the pub? All right, and number two, Chinese walls are all different. Big firms have lots, small firms have very few. Okay, there's very little agreement on what constitutes effective Chinese walls. So it's an example of where regulators just came up with a rule, came up with a principle, if you like, and truth be told, never really got to grips with how you manage conflicts of interest. Under the old system, you didn't have to. If you split out job titles in the city, say you do this, you do that, you do the other, and introduce fixed commissions, fixed incentives, then you've managed conflicts of interest within job definitions, if you like. But with the Big Bang, all of those boundaries got merged. Okay, and that's something that regulators never really caught up with. The other thing is that central banks, you know, arguably still haven't twigged that bankers will be bankers. Okay, asking bankers to change the way they behave is a bit like asking the mafia to stop shooting people. All right, it's not going to happen. All right, so basically, central banks didn't wake up to the fact that if you create a very low cost of capital for banks, they will just carry on gambling and doing what they do to create the biggest possible bonus pools and so on and so forth. All right, why wouldn't they? That's their job. And this sort of type of investment banking, big bonus, short-term incentives, high-frequency trading, all you could argue is at least accelerated by Big Bang, and really by, you know, for example, keeping central bank interest rates as low as the US and the UK central banks did for as long as they did, they perpetuated the kind of behaviour that led to the credit crunch. In other words, regulators and central banks have always frankly been a little bit, to put it bluntly, behind the curve, arguably since the mid-1980s. So if you're going to peg today's problems on Big Bang, that I think is the right one to use.